As of January 18, 2026, the stock market is currently closed. The Lithium Americas Corp stock price, trading under the ticker symbol LAC on the New York Stock Exchange, finished its last active session on Friday, January 16, 2026 at $5.96 USD. This represented an intraday climb of 1.53%, or a gain of 0.09 USD. In the after-hour session, we saw a minor cooling of 0.34%, bringing the price to approximately $5.94 USD. While a $5 price point might suggest a company still in the doldrums of the lithium bear market, the real story here is a massive structural shift in the expectation versus reality of domestic energy security. Just days ago, a bipartisan group of lawmakers introduced the Secure Minerals Act, which aims to create a $2.5 billion USD strategic reserve for critical minerals. This isn't just a political headline, it follows the U.S. government's direct 5% equity stake in Lithium Americas, a move that fundamentally changes the risk profile of this company. Most investors looking at LAC stock on the Robinhood app or SoFi Invest see a pre-revenue miner with a long road ahead, but the reality is that the U.S. government has effectively underwritten the Thacker Pass project as a matter of national defense. This creates a powerful curiosity loop. If the government is literally a shareholder, how likely is it that they will allow this project to fail or be delayed by further regulatory hurdles? The common expectation among retail traders is that lithium is a commodity in a permanent surplus, driven by a slowdown in electric vehicle adoption and high interest rates. People see the charts of Tesla stock or Apple stock and assume the EV gold rush is over. However, the reality on the ground in northern Nevada is that Thacker Pass, which hosts the world's largest known measured lithium resource, is finally entering its most critical construction phase. In the first 2 weeks of 2026, we've seen the arrival of major long-lead processing equipment at the Winnemucca fabrication yard. This marks the transition from permitting and planning to building and installing. If you are searching through investing sites or looking for investment help, the gap between LAC's $1.8 billion USD market cap and the intrinsic value of an 85-year mine life is becoming impossible to ignore. The market is pricing this like a speculative exploration play, but the reality is an industrial-scale infrastructure project with a $2.23 billion loan from the Department of Energy already in its pocket. Recent stock movement has been a direct reflection of this tug-of-war between macro commodity prices and project-specific milestones. On Friday, we saw trading volumes surge to over 22 million shares, significantly higher than the 3-month average. This suggests that institutional players are finally stepping back into the fray, likely rebalancing their intelligent portfolio allocations as the strategic reserve news sinks in. We've seen the stock climb over 35% since the start of 2026, breaking out from a long period of consolidation near the $4 mark. This momentum is fueled by a growing realization that while the world might have enough lithium for today, it does not have enough lithium onshore for the 2030s. If you are managing an individual brokerage account or using interactive brokers trading, you've probably noticed that LAC is starting to decouple from the broader lithium indices. It is no longer just a lithium play, it is an American supply chain play. Comment below how many shares of Lithium Americas Corp you currently hold, or if you think the government's 5% stake is a sign that they will eventually nationalize key mineral assets. To understand the business model, you have to look past the current lack of revenue. Lithium Americas is a pure-play developer focused on the Thacker Pass project in Nevada. Their strategy is built on a massive partnership with General Motors, which holds a 38% stake in the Lithium Nevada subsidiary. This isn't just a financial investment, it's a 20-year offtake agreement. GM has essentially pre-bought the entire production of Phase 1. This removes the market risk that haunts most mining companies. In a world where NVIDIA stock thrives on its control of the AI supply chain, LAC is trying to control the lithium carbonate supply chain for North America. Their goal is to produce 40,000 tons of battery-quality lithium carbonate in Phase 1, with a total nominal design capacity of 160,000 tons over 5 phases. For those doing self-investing on platforms like Fidelity or Interactive Brokers, the key metric isn't earnings per share yet, it's project completion percentage. As of late 2025, detailed engineering was over 90% complete. The expectation for 2026 was that lithium prices would remain depressed, keeping companies like LAC in a state of perpetual cash burn. The reality is that several higher-cost producers in China and Australia have already shuttered operations, leading to a tightening supply market much earlier than analysts at JP Morgan or Goldman Sachs predicted. When you look at your Fidelity Wealth Management dashboard or check your SoFi Robo-Advisor, you might see that the materials sector is starting to rotate from underweight to neutral. This rotation is critical. It means the smart money is anticipating a deficit by the end of 2026. Lithium Americas, with its low-cost sedimentary lithium process and state-of-the-art technical center in Reno, is positioned to be one of the lowest-cost producers in the world once they reach mechanical completion in late 2027. They aren't just digging a hole, they're building a chemical refinery. If you are using Fidelity IRAs or the Robinhood app for online investing, the risks are still visible on the balance sheet. The company reported a net loss of over $190 million in their most recent quarterly filing, primarily driven by the massive capital expenditures required for construction. This is a capital-intensive marathon, not a sprint. However, the liquidity position is remarkably strong for a pre-revenue firm, with a current ratio sitting around 3.77. This strength comes from the successive tranches of investment from GM and the DOE loan. They have the runway to get to 2027 without needing to go back to the equity markets for a survival raise, which is a rare luxury in the junior mining space. This stability is why analyst sentiment has shifted, with Scotiabank maintaining a hold but raising price targets toward the $7 range as project de-risking continues. The reality of the current political climate also provides a massive tailwind. The U.S. government's 5% stake and the new bipartisan Secure Minerals Act shows that both sides of the aisle are committed to breaking the Chinese monopoly on battery materials. For a long-term investment, this political moat is perhaps more valuable than the lithium itself. It means that environmental permitting challenges, which have historically slowed projects like this to a crawl, are being handled with a sense of urgency. The expectation was a decade of legal battles. The reality has been a series of court victories that have cleared the path for full-scale construction. If you use Interactive Brokers platform or SoFi Trading, you should be watching for the final investment decision (FID) on Phase 2, which could be the next major catalyst to move the needle beyond the $6 level. For those focusing on online investment and Fidelity brokerage strategies, the volatility of LAC is something to be respected. With a beta that often sits near zero, meaning it doesn't move in tandem with the S&P 500, it can be a great diversifier, but it can also be frustratingly quiet when the rest of the market is rallying. The stock has gained over 60% year-to-date, compared to a much smaller move in the broader mining sector. This alpha is being generated by investors who realize that LAC is the bottleneck through which the domestic EV industry must pass. Without Thacker Pass, the transition to a localized battery supply chain is mathematically impossible. This gives the company immense leverage in future negotiations with other automakers or battery manufacturers. As we look toward the final section of our analysis, the expectation versus reality framing reinforces the authority of the long-term thesis. The expectation is that 2026 will be another waiting year. The reality is that 2026 is the year the iron goes into the ground. We are seeing the physical manifestation of a multi-billion-dollar project. For the self-investing crowd, this is the time to watch the construction milestones. Every major piece of equipment that arrives on site is a de-risking event. Every update from the Reno Technical Development Center that confirms the battery quality of the refined carbonate is a win against the skeptics. While you won't see revenue until 2027, the market is a forward-looking machine. It will price in the reality of 2028 long before the first truck of lithium leaves the mine. In summary, the central insight is that Lithium Americas is no longer a maybe project. It is a must-have national asset. The 1.53% climb to 5.96 USD is just a small step in a much larger revaluation process. We have gone from a company fighting for permits to a company backed by the U.S. Treasury and General Motors. The contrast between the initial retail skepticism and the current institutional and government